Hey everybody, Joe Pizar here with Washington Family Wealth. I'm a certified financial planner here in Washington, Pennsylvania. You can find us at WashingtonFamilyWealth.com. This is the second in our series of a financial calendar. So we want to bring something out every month, talking about some tips for you to take a look at with your personal finances every month throughout the year, just to make sure we're keeping on top of stuff. So this month we're covering tax prep and retirement check-in. So with that, our first thing of note, we're going to do tax prep. So every year, most of us have to file tax return with Uncle Sam just to make sure we're paying our fair share. So the first thing I want everybody to do, or I would encourage everybody to do, is I know we just got through Christmas, but we've got to be Santa. We got to make a list and we need to check it twice. So how do we make this list of documents and things that we're going to need to get our taxes filed? So first things first, go pull your last return that you filed, probably 2023, and take a look at all the different documents that you needed to file that. That might be your W-2s from your employers, your 1095-C to prove you had health insurance, your 1099s if you're an independent contractor, if you have brokerage accounts, retirement accounts, things like that. So all the different things that you need to get that tax return filed, start gathering them up to get either over to your tax preparer or to prepare your taxes yourself. A lot of great options out there for everybody in that regard. So, and think of it, so when we look at whether or not we're able to itemize, most folks under the current Tax Cuts Job Act won't be able to itemize, and that's not a bad thing, right? The standard deductions are $14,600 for 2024 for a single and $29,200 for married filing joint. So that means that if you don't have enough itemized deductions, you basically take the standard deduction and you just file as is. So it's a good idea, though, because we are going to be going into potentially going back to the old tax codes if Tax Cuts Job Act does not get grandfathered. So this is the last year, 2025 is the last year of Tax Cuts Job Act. We could go back to the old code parameters, which would lower the standard deduction. So it's a good idea to take a look at standard deductions and see if you're close. If I file, if I do something different next year, would I be able to itemize or not? But for most folks, you're not going to be able to itemize, but it's good to take a look and just take heed. Now, when we get to actually filing your taxes, right? Many of you use a tax preparer, so local tax service, an EA, a CPA, something along those lines. And what I would say is just finding the right preparer that meets your technical level, right? Certain people need more technical expertise depending on whether they own a business, whether they are itemizing or not, et cetera, and so forth. So finding that right preparer is always important. But also the IRS does have IRS Free File. You can access that at irs.gov. So IRS Free File at irs.gov is a free software that the government provides that will allow you to file your own taxes. So we all have that free option available to us. And if you have questions on this, please feel free to reach out. Happy to help anybody that has it. The last thing in regards to tax preparation that I am highly, highly stressing is please securely transfer your files to whomever you are trusting to prepare your taxes. So oftentimes I see, and most preparers will have a portal that you would upload all your documents to securely. That's the most secure way to get folks these documents so they can do their service for us. But if there is not that option or they don't have that option, not to fret, but make sure that we're getting those documents over to them as safely as possible. So if you had to email it, you could password protect it, you could encrypt it, you could send a secure email, you could physically give those documents to them, right? And just make sure you get them back or get your copies back, and or fax, right? Faxes are pretty secure ways to transfer files that are not going to leave a paper trail virtually or literally somewhere. So just be cognizant with how we're getting those important documents over to the people that need them. But please do not just send them over email, whether they have, sensitive info on them or not. We just don't want to have our data living out there on email servers. And most preparers that you use are going to have some sort of document portal to upload to. So just something to consider. So that's all for the tax stuff. Good luck with everybody with getting everything filed for April 15th. The sooner you get on it, the better. But the last thing I wanted to touch base on here today is a retirement check-in. So if you remember last month, and if you missed that, you can go back to the channel, Washington Family Wealth, and look at our January budgeting video about how do we look at last year's budget, how do we project this year's budget, just a quick little video on that. But this year, I want to make sure that we're taking into account, since we did our budget last month, we can see what the difference is between what we're making or what our income is and what we're spending or our expenses. And that is going to give us an idea of like, are we overspending, underspending, and where do we want to start when we start looking at our retirement? So there's two groups of folks in retirement planning. There's folks that are accumulating assets to retire and those that are already retired and distributing their assets. So if you're in that accumulation phase, what I would encourage you to look at is what was your savings rate for last year? What percentage of your income that you brought in did you save toward goals? Those goals don't necessarily need to be retirement. It could be funding college for a child. It could be a large purchase like a home or a car. But what percentage of your income were you able to save? And then for those that are in distribution mode, what percentage were you distributing from your accounts to live on? So that'll let us know like what percentage of our money did we take out of our investments in order to live on. Normally, that percent should be no more than 4 to 5%. If you had an extenuating circumstance, if you needed had a large purchase or a big medical bill or something, like that's reasonable, right? We want to make sure that we're just not spending more than the accounts can create for long-term success. And then the second phase of that retirement check-in is checking our probabilities. So when we do your financial plan, we check what is the probability that we'll be able to make it through a reasonable duration for this plan without running out of funds. And that's what we would do, and we're happy to help anybody do that. The next thing we want to look at is your allocation. So when we look at your investment accounts, are they the allocation? So what percentage are in stocks and bonds or in large, medium, and small companies, or however you break out your allocation? Is that allocation still in line with your risk tolerances and what you set out for? And what happens is over time, the prices of these investments all change, right? So if our large cap growth companies outperform our bonds, we're going to have a larger percentage of those in our portfolio if we're not systematically rebalancing. Normally, when we manage assets for clients, that's part of our process is systematic rebalancing. But when we do a retirement check-in, you just want to make sure that we're in line and you're not either being overly aggressive or not aggressive enough based on your plan that you put together and your goals. So check your investment allocation, make sure that you're within reasonable lines of the investment mix that you want. And then lastly, double check on cash reserves. So do we still have that adequate amount of cash reserve in FDIC insured institutions? So checking savings, money markets, high yield savings, CDs, that are FDIC insured. Those are our cash reserves. If we're in that accumulation phase, we're looking 3 to 6 months of our spending in there. And if we're in retirement, we want about 1 to 2 years of what we distribute from our accounts. So if you distribute $30,000 a year from your retirement account to live on, we need 30 to 60 in our cash reserves. If we're in that accumulation phase and our monthly budget is $5,000, we need between $15,000 and $30,000 in liquid reserves to have a fully funded cash reserve. So just a couple of things to check on as we get our taxes ready for April, and we are checking in on our retirement. But certainly appreciate everybody's time today. This one ran a little bit longer. I'm Joe Pizar with Washington Family Wealth, Certified Financial Planner. Please like and share the video. And if you have any comments or input, we're happy to take that. You can find us at WashingtonFamilyWealth.com, and certainly appreciate everybody, and we'll see you next month. Take care.